Hey everyone, welcome back to the channel. Today's episode is on Robinhood, the company best known for halting trading at the peak of individual investors' short squeeze of GameStop back in 2021. They did this to make sure that the big bad hedge funds don't lose too much money. Because, hey, the markets are risky, and if you don't know what you're doing, maybe you shouldn't be trading. Unless you're a 20-year-old college student with no income or formal training. True story. Back in 2020, Robinhood let Alex Carnes get access to almost $1 million in leverage, which is another word for debt used to amplify investment capital, to buy options. Now, the interface gave some confusing information to Mr. Carnes, again, who had no formal training, leading him to think that he was almost $700,000 in the hole. Tragically, he then took his own life. So why do I bring all this up? This happened years ago. Well, I really want to highlight what's in Robinhood's DNA in order to tee up what they recently released and the features that they're chomping at the bit to move further into. In late September, Robinhood released a new feature that they're pushing hard into, and that's something called events predictions. This is a new feature that will allow users to straight up gamble on the possibility of a certain event happening in the future. The offer is new, and right now Robinhood only has one event that it opened up to event predictions. The 2024 presidential election, which, according to their press release, they're attempting to democratize access to events as they unfold. I'm sorry, what? Either the person who wrote that isn't very good at sentences, or more likely, they didn't feel very comfortable coming out and just saying, we're looking for more and more covert ways to take more and more of your money. But before all that, do I think event predictions are a bad thing? Actually, I really don't. A couple of years ago, I read the book Super Forecasting, which covers something called the Good Judgment Project, where everyday people compete against experts to predict global events. And it turns out that it works really well for the everyday people. They are normally able to predict events better than experts. So I don't necessarily have a problem with event predictions. And hell, I'm mostly a free market guy. I don't care if people want to gamble on events. But here's my problem. Robinhood has the mindshare of our nation's young investors. Full stop. They had the ability to solve what I believe to be the largest issue in our nation, the ever-growing wealth gap between the haves and the have-nots. To really highlight what I mean, let's take a look at this article from the nonprofit USA Facts. And it covers how wealth is divided across America. And it shows what type of assets are controlled between the top 1%, the top 20% excluding that 1%, the fourth 20, the third 20, etc. And you can see it's not real estate that makes the biggest difference. It's not retirement accounts that makes the biggest difference. It's not private businesses. And it's not other assets. It really is. Stocks and mutual funds are most associated with wealth. The top 1% has $15.45 trillion in stocks and mutual funds, which is more than the rest of the 99%. So equity ownership is the alchemy of wealth. And I love that Robinhood was able to capture the mindshare of our young investors. They had a wonderful opportunity to do good. And if you ask anyone, even Robinhood, what their app is designed for, they'll say it's an investing app. And that's where my real problem is, that they're mixing gambling with investing, and it's not the same thing. They are becoming further and further from being an investing app. The Verge wonderfully called it a nihilistic finance app, and I think they're dead right about that. Let's follow the money. If we go into Robinhood's most recent annual report, and we look for their revenue breakdown, we can see they break down their revenues between transaction-based revenues and net interest revenues. And if we take a look at the breakdown of their transaction-based revenues, we can see that options make up a quarter of their revenues. Cryptocurrencies make up 7%, equities only make up 6%. Remember, most individual investors should not be doing options trading. That takes away any advantage individual investors have because you're competing against hedge funds, which have quants that will beat our ass every time. So if we look at their revenue breakdown, they make the most amount of money from selling options. And their second biggest source of revenue is interest on corporate cash and investments, and then margin interest, basically collecting interest on people using leverage. And then interest on segregated cash and cash equivalents. There's really nothing wrong with that one. But if we go to their quarterly report, we can see that their total net revenues have increased 36% year over year. But remember, their most recent annual report is in 2023. They report that their transaction-based revenues increased 72% year over year. And that's primarily driven by options revenue and cryptocurrency revenue. And I guarantee you that they see predictions as their next foray into making more money. Remember, when you're gambling, the house always wins. They will set the stakes so that regardless of which outcome it is, even if you pick the right one, they will still make the most money. Charlie Munger says, show me the incentive and I'll show you the outcome. Robinhood is clearly out for Robinhood. They will gladly pull the rug out from underneath individual investors when we're finally up and squeezing the hedge funds, and they will be more than happy to try to encourage you to make bad investment moves so they can make a quick buck off your ignorance. The irony is not lost on me that the company is named after a legend who stole from the rich and gave to the poor. They are doing the exact opposite. Remember, if you aren't paying for something, you are the product. So that begs the question, should you use Robinhood? I mean, I was an early investor of Robinhood. I started using the app around 2015, and I had a 6-digit account with them. But I left in 2021 amidst the GameStop bullshit. I had no stake in that. I'm a Buffett-style investor, so GameStop didn't really have the fundamentals that I wanted. I respected the short squeeze by individual investors, but I wasn't going to put my capital at risk. Rule number 1 investing is don't lose money. Rule number 2 is don't forget rule number 1. But if you like Robinhood's application, their user interface, etc., then just make sure that you want to stick to where you have an advantage. One of the only advantages we have as individual investors is time. Hedge funds have access to more real-time data to quickly jump on short-term news. Quantitative hedge funds have legions of people with PhDs in mathematics to calculate the various odds of various option contracts coming true, so we shouldn't compete there. You will not beat them in this game. But what hedge funds also have are clients and other competitors. If they have a short-term loss, if they have 1 bad quarter, 2 bad quarters, or a bad year, those clients will leave them, and they'll lose their main income source. They're investors, not their returns. They're investors paying them a 2 and 20. We don't have investors, and really we don't have competitors. We can take a very long-term approach to the market. There are 2 ways to do this: active investing and passive investing. Passive investing is just dollar cost averaging into low-cost ETFs, like SPY that tracks the S&P 500, which the S&P 500 is the US's 500 best companies. There's various metrics to get in the S&P 500. I won't cover that here. And if you just want a dollar cost average in the S&P 500, it really doesn't matter what app you use. So yeah, Robinhood's just fine. Active investing is stock picking. It's my belief that the only way individual investors should be doing active investing is what we call Buffett-style investing. That's where you pick a business that you are capable of understanding, either through your passions, work experience, or other lived experiences, and then you do your homework to make sure that it's trading well below its fair value with a margin of safety. This simplifies the number of things that are just unknowable to us as individual investors, and it's what has made Buffett the greatest investor of all time. There's a 100% correlation between the stock price and a company's future earnings over the long run. So if you find a company that you think will be able to grow earnings well into the future, and it's trading for a fair price, then there's no reason to believe that it won't work out well in your favor. And that's where the project I've been working on for over 4 years comes into play. I mean, I even taught myself how to code to try to make this thing come to life. We just finished releasing a course that will show you how to do your due diligence, just like Warren Buffett does before he invests in a company. Not only that, there's also a data and a social platform that sits underneath it. So you'll be able to see the metrics real time about the company you're analyzing for. I think it's a really cool product. We're still in the early stages, and there's still a ton of things we want to release. But if you're interested in signing up, there'll be a link to the site in the description below. Next to the link in the description for flankinvesting.com, you'll also find a coupon code for 60% off. We're offering that to the first 10 people who choose to use it, and that's as a thank you for being here early. Anyway, if you want to use Robinhood to do active investing, just be extremely cautious. Active investing is hard enough without Wormtongue whispering in your ear to do crazy shit that'll make him more money. And if you want to gamble, just go to the casino. At least a casino will give you free cocktails. Gambling on Robinhood will just cost you a night of sleep. Before we go, here's a letter that Alex shared before he took his own life. It was shared by his cousin. He wrote, "If you're reading this, then I am dead. See the image Suicide 2 for why. How was a 20-year-old with no income able to get assigned almost $1 million worth of leverage? The puts I bought and sold should have canceled out. But I also have no clue what I was doing in hindsight. There was no intention to be assigned this much and take this much risk, and I only thought that I was risking the money I actually owned. If you check the app, the margin investing option isn't even turned on for me. A painful lesson. Fuck Robinhood." And this next feature that Robinhood is releasing is going to be even more disappointing than their previous missteps. At this point in the script, I was going to share congressional testimony of Vlad talking about Mr. Kearns, but we're going to leave his alligator tears out of this because I don't think they're worth your time. Robinhood promised at the end of the GameStop debacle and the death of Mr. Kearns that they would do better. They aren't. They won't. It's up to us to wise up, or the rich will continue to feed off of our hard work. That's all for this episode. If you enjoyed it, please consider giving us a like and subscribe. We'll see you next time.